In this video, I'm going to show you how I caught 86 points trading the NASDAQ futures today. And I'm also going to show you how I was able to avoid getting caught on the wrong side of the market at the wrong time. But before I do that, I want to just say one thing. I've said it before and I'm going to say it again continuously, but trading is temporary. No matter how much money you make from doing this, no matter how rich you get, it's temporary. You can't take it with you into the next life. And one thing that is for sure, one thing that is for certain is that we are all going to be judged for the way we live this life. Jesus Christ is going to return to this earth to judge the world. We need to make sure that we are on the right side when he does return. So if you haven't, please give your life to Jesus Christ. He died for your sins and rose from the dead to prove that he is God. And he wants to save you. All you have to do is believe in him and you can have eternal life. You can have salvation in the next life. It's not wrong. It's nothing wrong with making money, but let's keep the main thing the main thing. So let's get into the video. So the first thing I want to point out is that we are on a 4-hour chart for the NASDAQ futures. And I want to bring your attention to this 4-hour sell side imbalance, buy side inefficiency, bearish fair value gap that we traded into. This was from February. We traded into that overnight today or early in the New York session today. And then we also did sweep this liquidity from early March 3rd, yesterday afternoon off that huge rally that we had yesterday. I also want to bring your attention to this bullish 4-hour fair value gap that we had here. This was a gap that was formed. We had two of them formed yesterday. After that rally that we had yesterday morning. So let's go to a 15-minute chart. So on the 15-minute chart, I want to point out a couple of things. Number one, you can see that we are trading in between two imbalances: a 4-hour bullish BISI and a 4-hour bearish SIBI, right? A bearish fair value gap and a bullish fair value gap. So that being said, going into this day, I didn't really have a super strong bias on which way prices could go because we were trading in between two strong higher time frame PD arrays. So that being said, I was waiting for the market to give me confirmation for what it wanted to do. So a couple things to point out: we had some sell side liquidity here from our Asia session last night, which was swept this morning in the New York session in what you'd consider pre-market. So we had that, and then we also had London highs here, which were swept in that New York session this morning as well before the New York Open. So we had two liquidity pools that were swept this morning. I will point out that this was a great entry here if you were awake this morning at this time to catch this. You see we had a change in state of delivery here after a sweep of liquidity, right? That's the model that I teach. That's the model that I always talk about, right? We want to see, if we're looking to play long, we always want to see, right? Lows get created, sweep of this liquidity, close above the series of down close candles, retest and higher, right? We had this sweep of liquidity here, right? That's what happened here. We had a change of state here, retest. Isn't that this same setup here? Came up here, retested it, and went higher, right? So that's that same model. So that was a great entry, right? Coming out of that higher time frame, 4-hour fair value gap, swept London or Asia lows and traded higher, right? You could have got entered here at 6:30 a.m. Eastern, traded all the way to London highs or this 4-hour imbalance. Another setup, or that was a great setup. So what I was looking for going into market open, honestly, I was leaning towards the short side. Why? Because this 4-hour fair value gap was fresh. It had not been touched yet, and we had now traded into it. And we were also trading in a weekly bearish fair value gap. So those two things made me kind of, it gave me more of a short bias going into market open. We did have this buy side liquidity here, which was swept right at market open at 9:30 a.m. Now, in order for me to justify my shorts, what do I need to see? Well, that same model I just showed, I need to see it on the other side, right? So making higher highs, higher lows, boom, sweep of liquidity, change of state, retest, go lower, right? So this sweep of liquidity, change of state of delivery, retest it, and going lower. So that's that same model I was looking for. I wanted to see that in order to justify me entering short, right? So we had the sweep here. Where's the series of up close candles that swept liquidity? Well, it's this. We only have this one candle, right? So this is a change of state of delivery here. So now I needed the market, and in order to justify me going short, I need the market to close below this price, right? One thing I also want to point out is that we did have this change of state here, which technically the market did not quite retest yet. We did on this tap, but we hadn't really come down and retested it yet. So that was something to watch for as well. So you can see the market here. Boom, we trade lower, but we could not close below this below this series of up close candles, this up close 15-minute. That told me that the market was not quite ready to go lower yet, right? It still possibly could go higher. And then boom, again, we come back, retest it again. We still can't close below it. Now at this point, if we look at the 1 minute, this is just nonsense. This is chop, this is noise, time dilation, whatever you want to call it. There was an opportunity to go long here, obviously, if you took the entry off of this change of state. But again, because we were trading into this, we had traded into this 4-hour gap, I wasn't looking for really a long, although there was an opportunity to take a long there. So, but this told me that the market was not quite ready to short. So again, seeing that, and then I believe we came in, retested it again here. All right, so now 3 times we've tried to close below there, we couldn't. The market was obviously trying to go higher again for some sort of draw on liquidity that was above us, right? So we had this buy side liquidity that was resting here as well, right? So at this point, I wasn't going to take a long, because if I was, I would have had to enter my long down here. That's just what I like to do. But I'm not mad if someone did take a long after seeing this. But you see, we couldn't close below there. So to me, I stayed out. And again, that speaks to what I mentioned before. I avoided all of this. I didn't get caught up in this. A lot of traders probably got chopped up trying to short down here, right? I didn't, because I didn't see what I needed to see, right? We come back down again, then we tap it and we rally up, right? So again, that's 4 times, 1, 2, 3, 4 that we tried, almost 5 that we tried to close below this change of state. The market couldn't. So that tells me we're going to go higher. Absolutely. Right. So now it's just a matter of where the market wants to go and what it wants to do. We come back again, try to close below it, but again, we fail. The market pushes back up. So you can see from here, now the market does make another move higher. We continue to push and push. And then we do sweep this buy side liquidity that was resting here at this point, right? Now, what do we sweep it into? This 4-hour sell side imbalance, buy side inefficiency, consequent encroachment, right? Which is the midpoint of this bearish fair value gap. We sweep right into that. That's a great indication that the market is potentially looking to change directions, is when we do hit the consequent encroachment. So now, where would in order for me now to justify a short, because now we've hit that objective of sweeping this liquidity, right? We also had an SMT with the S&P 500, right? The S&P 500 did not take out that high of day quite yet, but the NASDAQ did. So that to me was added confirmation. But my last thing I really need to see is this change in state of delivery, which we get. Whoops. Do that. We get that change in state here once we close below it, right? That's the series of up close candles that swept the high, right? So that's the one we want to close below on the 15-minute, right? And then again, I don't enter on the 1. I don't care for the 1, but for the sake of showing that I just entered on the 15. A lot of people ask me that question. I literally always just enter on the 15 on the retest. I don't even care for what's going on the 1 minute. I like to enter but I'll show it here just for the sake of getting the right entry, right? So selling here, stop loss there, targeting sell side liquidity, as well as the midnight open, which was about here, right? So we had sell side liquidity that was resting here. Right, so that's that same low from here, right? So targeting that, and you can see from here, again, entering on the 15, we get that retest, market pushes lower, showing weakness, which is great. And from here, we kind of just have smooth selling down into these lows. And it was a pretty straightforward trade. Great execution, great patience on this trade. If we look how it looked on the one, you can kind of see it was really just a matter of trusting your analysis here to hold, right? And look at this. The candles are respecting this change in state, right? The bodies are respecting it perfectly, right? The bodies are staying below that change in state perfectly. Doesn't have to, but it's great that they are, right? And if you really want to get a more precise entry, you can find the 1 minute change of state. Where's the series of up close candles that swept liquidity? It's these, right? So this would be a 1 minute change of state here, right? 1 minute change of state. So you could have either entered there. Me personally, like I said, I just enter on the 15. That's all I need to see. And then boom, we get smooth delivery right into our target, which was that sell side liquidity from this morning. And I do believe we again tapped this change in state. So this change in state level ended up being a great level to play longs off today. But again, I wasn't looking for longs, so I didn't end up using it. But had I did, it would have, you could have used this 3 times and banked each time. So, but this was a great trade. Caught about 80 points on this, a little over 80 points on that. And that's, you know, generally all you need. 2-to-1 risk to reward, risking, right? Stop loss. I didn't even mention where stop loss would be. It would be above here, right? Stop loss above here, because that's where the trade is invalidated now. Targeting here, right? Risking 44 points to make 80 something points. That's, and really it was like towards the midnight open. So it was like right here. Yeah, great trade, great risk to reward. Can't complain with that at all. So yeah, that's pretty much the trade from today. It was pretty smooth, great price action. This was only my second trade of, or my first trade of the week. I've only taken, I think, 2 trades this month. I'm being very particular and I'm being very patient about the trades that I'm taking this month. I'm not looking to take anything that's forced. I'm only taking 15-minute execution trades, and that's my plan for this month. So if I only take 8 trades this month, then so be it. Remember, in trading, generally, less is more. Less is more. Just because you're trading more does not mean you will be more profitable. I prefer to take these trades, even if the risk to reward is a 1-to-1 or a 1.5-to-1, versus taking, you know, 2-3 trades a day, right? This just helps me preserve my mental capital and stay fresh and ready for the next trade. So anyways, that's all I got for y'all in this one. I will see y'all in the next one.